Good morning to all. Today we are focusing on the US dollar index as we close out the first quarter of 2026 as well. The DXY is headed for its sharpest monthly gain since last July, up over actually 3% or so in just in March. January was negative. February was kind of there is an inside bar. To be fair, this is more of a reversal pattern, and it was mixed, one can say. And now we are cementing the status of the dollar as the world's safe haven, with March, of course, being up quite a bit. However, the reality is that on the technical side, the dollar is struggling to maintain its footing above the 100 psychological support for now. Yes, we are above that level currently, and you can see that clearly. We have closed on Monday above it, today also above it, but are we going to close also tomorrow above it? This is a question that we need to actually seek the answer to tomorrow, Wednesday, because typically a third day of closing above that specific day level would confirm the breakout. Now, the market, of course, is reacting to massive geopolitical whiplash. Over the weekend, President Trump announced that the US is in serious discussions with a new and more reasonable regime to end military pressures in Iran. This sparked hopes of a ceasefire and kind of prompt a bounce also in equities. At the same time, the situation remains quite fragile. As you probably know, there is a lot of headlines popping. um, Trump renewed his threat to obliterate Iran's energy plants and oil wells if the Strait of Hormuz is not reopened. And at the same time, we have had thousands of US Army paratroopers arriving in the Middle East, as well as Iranian strikes in a berth in Dubai. So the fundamental reality is that as long as the strait stays closed, the dollar remains supported. But with peace talks on the table, investors are looking for excuses to secure profits, opening the door for a technical pullback. This is what we're looking for today, a technical pullback. So right now, we are hovering just above the previous November high, okay, at the 150, let's call it. And we're also above the March 13 high of 99, of actually the same level. However, the most notable feature on this daily chart is a very clear bearish divergence, of course, in momentum that we easily spot between price and the indicator itself. So let's just pull that new one line over here. There is from 65 all the way up to 75, 10 RSI points for these RSI divergence to be invalidated. So there is more room to the upside in the short term. Okay. But what is important here to note is that momentum is waning. We've peaked around 170 for now. But if prices fail to extend to 101, which is the next psychological handle, and start falling from there, then that would validate the divergence and it would create I would say, a false break above the previous peak. Okay. But keep in mind that the broader macro structure resembles a broadening wedge pattern, which typically also functions as a larger correction. So although we are expecting for a technical pullback, if this pattern plays out, it means that we could see prices going all the way back to where they came from and below 95.20. But do I think that is going to happen? Well, as long as the crisis in the Middle East persists, I don't think that's going to be the case because we have to prioritize the macro environment, not the technical environment. So, because of this setup, we are currently, however, biased to the downside. I repeat, not for a macro trend reversal, but strictly for a technical correction. So we have a resistance where we currently are, and Last time we looked at this Fibonacci extension before we had wave 4 in, we looked at the 200 Fibonacci, which brings us to 101, again, which is a psychological level. Okay, remember that. However, since we have now confirmed a wave 4 correction down at 98.90, we can use the net distance from the beginning of that trend to wave 4. And that way, we can actually project where wave 5 might end. And then again, the 38.2 and the 61.8 extensions gives us the 191 and the 102.16. So these break, the break of the 38.2 is going to probably open the door to 102 and higher, which has to face also the broadening trend line of this pattern, which is much lower than the 102. So as you understand, this zone is becoming increasingly strong from a technical perspective. So if macros also do not point to a specific escalation, then we're more likely to see a technical correction. So for those looking to trade this, you can look to scale it to short positions near the current uh, resistance, the peak, okay, at 170. Also all the way up to 190, because there is room for upside, okay. We might come and retest the overbought um, threshold at 70. So essentially, if we go a little bit lower down, how I'm looking to trade this is the short position. I would probably go in at 1645. As you can understand, the stop loss can go, well, it depends on where your target is, but above 101, let's say 10 pips, 10 points above the 101. The strong resistance is at 191, so that gives plenty of room. And on the technical level, the first target could be the previous peak over here at 99.71, structurally speaking, and then all the way down to 98.90 and 98.50, perhaps even lower territories. Okay, so we are protecting our specific trades in the short term. This is a very good risk reward ratio. And what we want to do after the first take profit level, we want to trail that stop. Okay, now note and be very cautious about the 100 psychological support. If we don't manage to break that, it would make sense to start taking profits early. Okay, so to quickly summarize, the dollar is heavily overextended after a very good monthly gain, and RSI divergence on the daily is really flashing a warning sign. So while the macro safe haven narrative remains intact, right, nothing is changing. We are playing a short-term technical pullback or correction. Depends on how low are we going to go. Probably this is just going to be a deep, to be fair. So we are fading the rally into the 170 or so, 190 resistance cluster, keeping the type stop just above 101.10 or so, and targeting a flash back down to initially the 100 and then 99.75, 98.90 and 98.50. So manage your risk, keep a close eye on those P stocks headlines, and I will see you in the next video.